Hi, everyone, and welcome to Wall Street Multimedia's Market Watch. I'm Tiffany Liu, bringing you the latest market news. On Monday, China's stocks ended 1.1% lower as commodities continued to slide, and economic data showed manufacturing activity fell to a two-year low. Meanwhile, Greece's stock market reopened after a 5-week freeze, plunging 16% by the day's close. There's been no spillover effect so far. U.S. stocks ended Monday 0.5% lower as oil price tumbled below $46 a barrel. On Tuesday, China recovered a bit, with the Shanghai Composite closing 3.7% higher and the Shenzhen market 4.8% higher. This followed an announcement from Beijing about new restrictions on short selling. However, some are concerned that this move could be a sign of government overreach. The U.S. market traded choppy early Tuesday, even as oil prices stabilized. Investors await key jobs reports due later this week, which may provide a clue as to whether the economy is ready for a Fed rate hike. Let's turn to Peter Costa to see what he has to say about China's new restrictions, the massive slide in Greek stocks, and the upcoming U.S. jobs reports. So Beijing's announcement that it would crack down on short selling seems to be helping investor sentiment in China, but some are saying that these interventions will only worsen the Chinese stock market going forward. What's your view on this?
Well, I'm of the mind that I don't think that government intervention in any kind of equity markets is a positive thing. The Chinese market is a little different than the U.S. equity market, but it's not that much different, And I think that anytime you put governments directly in line with investors or against investors, I think that there's going to be an adverse effect at some point. It's been proven time and time again that the government's not a great investor, and whenever they get their hands on any kind of legislation or trying to prevent something, it tends to screw up. So I'm not a big fan of the Chinese regulators getting involved.
The Greek stock market plunged 16% after reopening on Monday. Do you think Greece is still a concern that'll weigh on U.S. stock market?
Well, I'm probably the only person in the world that thinks that I could care less. I really, to be honest with you, you know what, the Greek stock market could go to zero and it will have zero effect on the U.S. economy. The European economy might be affected because, there'll be some serious, hedge funds that might have some issues there. But I think most of the people that have been investing in Greece are already out. Anybody that would adversely affect the U.S. market. And you know what, their import-export business is not that big. So I've never been a big fan of even. To me, it's a waste of a lot of talk.
U.S. stocks have been struggling in early Tuesday trade as investors await economic data later this week. What significance do you think these reports hold, and how will the market react to them?
Well, I think that Friday's jobs report, the employment report, we like to call it, I think that will be very significant. If there is any kind of wage appreciation, which I think is what the Fed is really looking for, if there's a significant move as far as that's concerned, I think that might prompt the Fed to start raising interest rates probably in September. If there isn't, and there's still very, very moderate growth in that area, I have a feeling the Fed's not going to act probably until next year sometime because they're just not seeing the data that they need to put higher interest rates in effect. So I think this is a very significant report. I normally don't say that, but I think this is probably the most significant one we'll see all summer. I think there'll be a lot of the market may react whatever it does, but that's going to be a short term. But I think longer term, I think it's very important.
That's it for this episode. I'm Tiffany Liu, and thanks for watching Market Watch. I'll see you again next time.